All right, guys, let's do one more example to really cement this knowledge. Of course, if you guys still have questions about putting this stuff together after you watch these two examples, that's exactly what Jay and I are for. Feel free to ask us your questions on any concepts presented in this course, including these worked examples, as well as submitting your own worked examples to us in the trade section of our server, where we can review and kind of go through this checklist and see if you're really grasping kind of how to put this stuff together. Okay, let's take a look at this example from August 22nd. It's going to be a Friday. We're going to start with the universal model and our market maker model, and we're also going to be blending in some profiling in here, okay? So I guess I should also add that as a core concept for this example. Namely, I want you to consider how this weekly candle has opened, okay? As you can see, if I look at the correlated asset of triads, we have Monday open up here, right, as a consolidation. We have Tuesday forming this high on YM, which sweeps out the Monday high and diverges with the NASDAQ, okay? This is the trigger in the form of SMT and this precision swing point for price to then offer a new phase lower, meaning we trade away from our weekly open into, of course, a key level. Now, if we look, we can still see we are overall quite bullish in this market, right? We have failure swings looking left, and we are coming off of an expansion leg, a retracement, and then a new expansion, right? These shallow raids are very interesting to me as potential areas to trade higher to. So as I see the market chop and trade lower into Friday, I am viewing this as a seek and destroy or protraction phase of the weekly candle that will be reversed against on Friday. So we open, form a opposing run with SMT, we trade lower, and I have a key level of interest right in here. This here is my internal range of liquidity on the daily chart. So some people would call this a buy side imbalance, sell side inefficiency. You can call it whatever you want, but this is just a fair value gap, right? So as you can see, price trades into this internal range of liquidity. And now I'm considering, after I see this daily candle close, right, mechanically as a C2, if we can get any sort of reversal signature in this wick and then trade towards the opposing side of the range, this high. So what universal model is this? Well, this is going to be an internal to external range liquidity idea, as well as an external range to external range liquidity idea for just this weekly range that we've developed on Monday. That's the weekly profile I'm looking at. That is the open, low, high, close idea I am thinking of. So now I have to ask myself, is there a relevant swing that forms here? Can I qualify this as a relevant swing? This is where I'm going to use Kraken correlation logic and the idea of two-stage divergence. So the first thing I want to notice is, yes, we do diverge at this swing point low down here in the market. This is our first stage of SMT divergence, correct? You guys can all see that. We come in below, right, this low here on the NASDAQ and on the S&P 500, like this, right? And you can see that's our first stage in the Kraken correlation. Now, interestingly, I want you to pay attention to this in here. Wednesday, which does not trade into the gap on the YM, is the candle that takes out this low here on NASDAQ, right? We can even look at these lows down here. Then we can see Thursday form a failure swing on NASDAQ, right? Which is a two-stage SMT like Jay has taught you in our foundations course. So as I see this two-stage SMT form at the lows inside of a key level and this candle closure, I now can call this a relevant swing if I see a change in the state of delivery on the lower time frame here. So let's go down to the lower time frame and see if I can observe that reversal signature. Clean this chart up a bit. Here is our two-stage divergence in our key level. Well, what I need to see is the closure through the consecutive series of opposing candles into our key level. Mechanically, that is our change in the state of delivery. And now I can look to trade away from this swing here to the other side of the range, here, as an internal to external move and an external to external move as well in the context of this weekly range. So this is going to be my market maker model of interest. This is going to be my smart money reversal, and this is my original consolidation up in here. Right? You can see we have failure swings along this weekly range development. So now look at the next day, and let's give a little bit of a spoiler as to what happens and then show you how I would have traded this, okay? So let's get rid of this for a second, and let's play out the next day. So as we can see, the next day does exactly that as we anticipated, but let's see how we could actually get on side with this idea, right? Of course, we also have to look left, right? We don't want to be ignorant to the fact that we also have these draws that price can trade into, of course, as well, correct? But let's just look at the trade to this high, because I remember taking this trade with our community and how I approached this specific day. So what we're going to notice is that this daily candle opens, and immediately we form another divergence. Again, NASDAQ comes in, sweeps out this low, right? Forming this local two-stage SMT. And we're also going to get that same signature. Let me get rid of this dot here on the YM. We're also going to form that two-stage Kraken correlation right in here, right? Centered around this reversal candle that we already acknowledged. So now, if we go down and look at a daily profile, or what I've taught to you in the course as protraction profiling, right? This is another concept we can add here. That's going to cement this as a relevant swing. So as price comes in to this change in state of delivery area, right? You can see that we have a what profile. I'll give you a second to look at this chart, and I want you in your heads to answer, what profile is this? All right. Well, you can see here that we have a 2 a.m. reversal, right? After the opening price forms this low at 6. So Asia forms the low. London forms our SMT. This is a classic protraction. And now we can expect a New York continuation. So now I'm looking to trade away from this established low and this London protraction profile to all of these failure swing highs. And now we're going to look at this 6 a.m. open as an interesting time-based open that we can form a new fractal around. So this is 6 a.m. And let's see how we can approach trading this new fractal. So what I want to do is hop onto my hourly chart. And really in here is where I'm going to look and see if I can observe that lower time frame swing formation, right? Well, look at my key level. Price has reversed here in London with this SMT divergence, right? This is SMT divergence, and this is confirming our London protraction, right? This is an established swing. So now I only really have one key level that we can trade away from, and it's this fair value gap. If price doesn't find support in this fair value gap, we would have a deep retracement, which I don't want to see if we're going to expand higher, right? So let's look and see how price interacts with this gap, and if I can frame a local two-stage divergence or Kraken correlation amongst this area to frame a swing point. So I have my gap. I'm going to mark that out on my correlated asset triad. And now we're going to take a look at how the manipulation occurs inside of this area and how we form our new fractal. So what happens? At 7 a.m., you can see price comes in, right? Taps our gap. This is going to be an SMT fill, right? With the NASDAQ. And then we get another form of two-stage divergence with our precision swing at 8 a.m. You really have to zoom in to see this, but you can see that the 8 a.m. candle here is a precision swing point. Maybe I can make this a different color, like this gold color. Really pops out. And you can see we form a two-stage divergence around that precision swing that looks something like this, right? Okay, so once we form that two-stage Kraken correlation around that precision swing, I can look to engage price in this candle right here. And again, I'm just going to refine this on the 30-minute chart, right? I see 930 is that manipulation candle on NASDAQ. You can see here, 930 manipulates the range low. So what I want to do is position myself inside of this 10 a.m. open on whichever asset gives me a better signature. So once we form this, let me just mark out this candle so we can pay attention to it. I always go down to the lower time frame. Right, once we form this reversal and SMT, I can now look to trade either asset of interest towards the draw on liquidity. As you can see, we've expanded quite high in this range, so I can keep this draw on liquidity as a good 2R objective or in that direction. But what do we see? Well, first of all, I want to notice our reversal signature. So on the NASDAQ, you can see we get a closure through the consecutive series of opposing candles into our key level with divergence. That is our SMT, right? We see YM instead forms expansion at the open. Then we consider the phase of price. Look, NASDAQ is forming a retracement. YM is consolidating. The trigger for this expansion at 10 a.m. is therefore going to be this Kraken correlation that we see below these lows. So I can position myself either A, right, inside of this fair value gap, like this, when that Kraken correlation forms, or I can wait for a continuation, right? So I can position myself here. Again, I want to be risking that diverged low at the open, which was down here. And I want to be targeting all the way up to my draw, right? But maybe we'll just use 2R static for the purpose of this, right? So we can take that trade, or we can wait for even more confirmation because we have a driver at 10, which confirms this swing, and we can look to trade a continuation. So you can see we have an established swing formed before the driver. We expand with the driver, and then we have a new reaccumulation. We have a new inefficiency in here. Right? What we can do is we can wait for price to form an opposing run with some sort of SMT divergence potentially, which we have right in here. Right? I want to wait for a bulkier opposing run. So what I'll do is I'll wait for this candle to be closed through. And then I can trade a continuation, right? Something as simple as this. All right, and I can be looking for this range high. Right? And you can see price fails to take out that range high, but we do get, at least 1.5R. And let's see if we end up delivering, if I play out some more candles. Of course, you'd be closing out at the end of the day here, wherever that is. But I think we should see price continue to expand, right? It starts to consolidate in here. Let's play out some candles. And we can see that price consolidates, retraces, right? This is a 4-hour chart. This is the next day on Monday. So at this point in time, this day trade would be kind of invalid. But regardless, you can see that the opportunity zone really does exist for this 10 a.m. driver. And then there is a small continuation framework you can take inside of here, right? If you're holding for this high, unfortunately, you would not get that draw on the Friday. It might be delivered, in a different day. Okay, so that's the second example, and I think this does a really good job of pairing together the ideas of swing point formations, protraction profiles, Kraken correlation, and open high-low close concepts. So let us know if you have any questions, and we really do hope you enjoyed both the course and these examples. We're really excited for you guys to continue learning with us, and we are really excited for what's next to come, which is a lot more educational content.